family mode.
Good afternoon, everybody. Welcome to your Go Live Market Update and Charts of the Day. It is a pleasure and a privilege to have you here. Thank you very much for popping in. Whether you're watching this live through GoToWebinar, the YouTube stream, or catching up after the event, you're very welcome here. Thank you very much for making this part of your routine. I hope I can serve you well in terms of giving you a heads up on what's happening with various market factors, and also, of course, let's see if we can find a chart or two which is looking interesting. Of course, we're going to put up this important message just to remind you that this is for educational purposes only. Please make sure that you do your own due diligence on anything you see here. Make sure you follow trading plans, of course, manage risk on every trading action. Thank you to everybody who said hi in the questions box and on YouTube. Good day to Wayne and Brian and Hugh and Brett. Delighted to see you here, and of course Sonia in YouTube world. I did note that you'd said hello. Although there is a slight delay in me seeing that, but thank you very much for doing that. Right, let's get on with some headlines that are coming across the newswires today. Of course, US equities held, but are testing support. We'll have a look at charts in a moment. There is some evidence of sector rotation out of tech continuing. We do have NVIDIA earnings on Wednesday, and of course, one of the highlights of last week was the US government reopening, but there's a lack of directional clarity as to what happens next. The whole of the US seems obsessed by the vote that's going to happen, which appears to be gaining Republican support, as well as MAGA seems to be falling apart a little bit. In terms of the Epstein file release, more information on that. There was some emails released last week, which caused a bit of a furore and put this back top of many of the headlines. We are at the end of earnings season. It remains positive, 82%. EPS expectations, 67%. Beating revenue expectations, an overall growth rate of 13%, which is all very, very positive and has helped to a large degree in keeping up valuations as to where they are before this sort of minor pullback of around about 5% on the Nasdaq, for example. Other earnings of note this week are the major big retailers, with Target and Walmart amongst the ones worth keeping note on. US futures are positive today so far. When I last looked, Nasdaq is outperforming slightly. Asian markets are struggling to make gains. Both the Nikkei and the ASX were down. We'll get the latest on those in a moment. And European futures are pointing to a cautious open. Thank you very much, Wayne. The US dollar index, though, picked up a little bit, or sort of maybe pausing is a better way of describing it. It has continued to drift over the last week from 3-month highs. Gold also pulled back on Friday, retesting 4,100 after a stellar early part of the week. We just gave a good chunk of it back later. Copper and oil remain range bound. Copper looked as though it was going to potentially move out to the upside. Oil looked as though it could move to the downside, but both are mid-range at the moment. Again, we'll check on charts. Probably one of the major moves in major asset classes was that of Bitcoin. We are at 6-month lows. Now we've reached 100,000 support, that key psychological level. Hello, Sonia, you pop up everywhere. That is a significant move, and we'll have a look at a chart going forward. In terms of data, we're still not sure when we're going to get some US data on particular jobs, but we have a thought from some that there may be some jobs data released this week. We do have the FOMC and RBA policy minutes due following their respective rate decision meetings. Today, it's fairly quiet. We have got Canadian CPI due later on tonight. We did have some Japanese GDP, which was negative, so still showing contraction, but slightly less so than was expected. So yeah, an interesting set of variables for the markets to play with as we kick things off. Let's just have a look at some of these in a bit more detail. Let's just have a look at The future, well, we'll have a look first of all at how we closed on Friday. You can see there just a bit of a nothing day, really. A little bit of recovery, profit taken for those who had sold the Nasdaq. Interesting, Peter Thiel, who's a big player behind the scenes in the government, sold a chunk of Bitcoin and a chunk of stocks. Anyway, another story for another day. Here's the futures, and the Nasdaq continues to move higher. As you can see, the European futures are looking a little shaky. Oil is down today. Gold is holding on. Copper's down a little bit. And the FX markets are looking pretty flat, with the exception of the Aussie dollar, which is looking quite weak. If we look at how Asia's doing right now, there is a really, this is just showing general weakness. The Japanese market, the Nikkei, was 0.8% to the downside when it opened, so that's recovered a little bit. The ASX is still bimbling around 0.2% to the downside. Chinese and Hang Seng have recently opened in the last 25 minutes and are showing again little positivity. In terms of key data, there's nothing really that talks about. Interesting that the words AI bubble are now together. For those of you part of Next, I'm going to talk about that. I'm going to talk about that in tomorrow's Next session, if you're around and about for that. In terms of the data, this is really what caught my eye. The non-farm payrolls number and the employment rate, along with fully fed manufacturing and the weekly jobs, all now locked in for Thursday release. That'll be really interesting to see where this is. Of course, that number was back a couple of months ago now. We haven't had any jobs data for some time. We are seeing there's that CPI number in Canada, which is expected to be fairly flat. We've seen a smattering of FOMC members speaking throughout the course of the week. And then we do get some industrial production numbers, factory orders. That'll be interesting to see how manufacturing is doing. In the US on Tuesday evening. Also on Tuesday, we've got the RBA monetary policy meeting minutes, and we've got the US version on Wednesday, which will receive far more airplay. Throw in some GB CPI on, or UK CPI on Wednesday. And at the end of the week, we do have some flash PMI data, which is the one that tends to move markets more significantly. So we've got manufacturing and services PMI coming across the board globally. So Friday's a big day. Thursday could be a big day if that jobs data comes out. So those are the days to really keep an eye on. Right, okay, let's check out some charts, shall we? Let's start with oil, since I've got the chart up. You can see that drift down, but appear to be fairly settled mid-range. You can see we're heading towards those 4-year lows at the mid part of last week, following some EIA data, which was particularly positive or showed a build. We've got a same again this Wednesday, so keep an eye on that. As I said, copper's doing sort of similar. You can see there was that test again on towards the midpoint of last week of that key level at 522, but we've just failed to sort of capitalize on that. We drifted down in that session and really haven't done much since. And as for gold, as we're continuing in the commodity vein, you can see there that pullback Thursday, Friday, a little positivity today. So a failure to hold that breach of 41.50 that we saw on Wednesday, which is sort of interesting. So the jury's out now in terms of whether we sort of pick up again. You can see there in Asian trading, a little directionless. If you're interested in a short-term pinch, potentially on gold, I think that probably the level to watch is around about 41 and 10. You can see we are just bimbling around the 4100 level at this stage on the in this morning's trading. So potential 39 bucks if we move back into this range. So it's certainly worth keeping an eye on. If we look at the US dollar, you can just see that sort of drift to the downside. Temporary short-term support at around about 99, but nothing shattering going on there. It'd be interesting to see the US yen, however, which we'll look at in a moment. But before we finish on the major asset classes, just a quick look at the indices. You can see that support honored. It was tested actually on Thursday, but we saw that sort of bounce on Friday just to keep it around this level. So we've got a little zone going on around here, around this 25 150 level. But again, we could see with that sort of futures this morning, we're sort of testing a level, the potential move up towards 25 400 potentially on the cards. That's a really nice 250 bounce. So again, this is worth just keeping on your radar just to see how it cooks once Europe opens. 25 250, so around about 100 pips up from where we're trading now, be a fairly significant pause point. I'll be surprised if it breaches that even on European Open. It might take the US to do that. Nvidia earnings, by the way, is Wednesday evening. So that's really noteworthy. And why I'm suggesting some sector rotation is that if we look here, the NASDAQ, you can see is down around about from its intraday high. The futures is down just under 5%, whereas if we look at the Dow, the Dow has pulled back. It did pull back on Thursday with the rest of it. All sort of support level, but you can see that's around about 2.5% to the downside. So that's what I'm suggesting. Maybe a hint of sector rotation, though not categorical. Here's the US yen. Looks like a horrible chart. Really no direction at all in this. Even if we get a breach either side of this short-term range, it's moving into noise here and noise here. So not really jumping up and down about that. If we look at the euro yen, we can see the euro just pulling back a little bit on the arrow chart, the bottom of a new range that's been created. So you can see the top of that range is around about 180. The bottom of that range is around about 179.30. Let me just do this and then this. It's interesting why it's drawn it like that. There we go. There's a 30-minute chart. So I don't know why I did that, but we'll put it back again. So a breach here either side of this range looks interesting, but again, we're sort of restricted to around about 20 pips here and around about 20 pips here. So I'm not jumping up and down around that. Just a quick look at this. US Kiwi might be worth a look. LYC having a good day. We'll check out LYC. Looks as though it's a good day for rare earths. Okay, let's just I'll actually pop this chart on here. LTR. I'll look at that in some detail in a moment. But I just wanted to have a look at the Aussie yen. I was struggling really to find a chart of the day on FX. We have that weakness in the Aussie. Maybe that's where we're going to find it. Here's the Aussie yen. On the daily chart, you can see we pulled back from that essentially multi-month high. We were last up here. That was July. So we're pulled back from those pullback in July, and we're sort of back up there again. But that sort of reluctance to move through this level, maybe technically significant, could be an interesting level just to keep an eye on at around about this 140. If we breach that, we could see us down to test 100. So that is probably quite significant. Looking at the the Kiwi yen, not as convincing, and the US Kiwi, which came up on our. I don't know why the Kiwi is so weak today. It actually be New Zealand dollar Kiwi. Where's the? Seem to have lost my. There we go. We've got it back in. I know I can't see that. So I'm going to plant my flag in Aussie yen, but you're going to have to be patient with this one. There could be a short look. There could be two short-term trades. This is possibly an interesting way to play it. You can see that key level there. It was resistance, resistance, support, support. Back down to that level. It's pushing through now, possibly back into this range. It's about 35 pips or so down to this 140, and then there's a higher probability trade, possibly down to 100 there. Just put on our. I'm just going to put off on a pivot just to see if this is, yeah, almost smack bang on the pivots. So I'm going to make this, yeah, I'm going to make the Aussie yen chart today. It is breaching the just on the pivot level right now. And you can see the S1 level there looks like support, which is around about the line that I drew. So a couple of factors why this might be a good chart to keep an eye on. There you go. Right, let's take a foray into the ASX. TPG down 31%. Wow. Okay, let's start with a few that we've been having a wee look at. There we go. So Domino Pizza were one of our charts we were looking at last week, and you can see that continues to do very well. If you look at a weekly chart, you can see it in all its glory. We've breached this key level at this point. Looks as though we're heading back up to around about 25.25 if we look at the weekly chart. So this was a really good call. We have that slight retracement. Now we're through the 200 MA and we're continuing higher strong today, possibly around about $2. So a little shy, possibly around about 8.5% up to this next level. Really like this. PLS, lithium stocks also looking strong today across the board. You can see there was this pause at around about 335 again. For context, if we put it on the weekly chart, this could be certainly heading back to test $4, maybe 440 medium term. If this buying pressure continues, let's just look at LYC again. Really nice reversal here. 15, 16 could be one to keep an eye on there. I'm just going to bring this into here. There's a risk calculator. Actually, the US CAD's not looking bad. Which is a bit neutral overall. Just looking for another. I don't want to lose these up. That's why I'm putting them on. MU gone boom. Looking at our Luca. Again, like LYC, really nice sort of bounce reversal. I would probably be waiting for our Luca for a breach of maybe $7, and it might close this gap. But LYC looks like a better chart, doesn't it? To be honest. We'll keep that on there. Also worth an eye. Elders are doing very well today. Really nice bump. With corporate. Possibly move up to around about 780. So what's that? It's about 5% possibly. And Vulcan Energy is moving back up to a key level at around about $7. Again, about 5% possibly if it does get up there. IEL, is this the bottom for IEL? Possibly. We had a gap filled. And now we look as though we're consolidating around this area. There's nothing there that I'll be jumping up and down about. DRO, don't like it. That main pharmaceutical, yeah, main pharma. This has had a nice recovery, big gap to fill here. There's an earnings dump and a big gap to fill here. That could be worth a look at. I just want to check out another. What are the minerals doing? Just having a check and see what mineral resources we were having a look at these. They're actually down today. We're keeping an eye on this still, but I think it might have just done its thing. 53.60 is worth keeping an eye on. But thanks to Hugh, because Hugh sort of pointed out or had a thought about AAC in the cattle industry. There's the weekly chart just to see context. If we look at the daily chart, we look as though we're pushing up against this 145. We're back through the 200 MA. Really nice bounce this morning. Long term, obviously the key level to get interested in is if it breaches 154. But there may be an opportunity in between that. If we reach 145, that would take us over these resistance levels here, which have had multiple attempts over the last few months. The last time it breached this with any intention was back here in early-ish September. Took us all the way up to 154 before the drop back down again. Are we going to get back into this range? You can see this has done this twice, 3 times now. When it's moved into this range, it's made its way all the way up to 154 and then dropped all the way back down. So technically, this looks like an interesting chart. 150, 145, maybe 146 would merit a look at this with a possible 5 or 6% to the upside. But as I said, the high probability trade is if it breaches 155, that suggests the buyers are really interested. But as a short-term kill on something a little different, maybe this is worth a look. And certainly the rationale Hugh suggested was the reduction in tariffs on some agricultural goods, including beef, which may be part of the reason this is doing so well, of course. So thanks to Hugh for that. All contributions always welcome. But my chart of the day, I'm actually going to put my plant my flag. I'm going to give you 2. I'm going to give you Domino's Pizza for a continuation of a move up to around about 24.70. As I said, that must be around about 8%. Let's higher than that. Almost 10%. And LYC should we breach 15.16. And just keep an eye, as I said, on some of the lithium stocks. We didn't have a look at LTR, but we should. It's sort of got really stuck at 147. 3 attempts in the last 3 days, that's been its high now. So that's sort of interesting. So maybe PLS with its breach of that pause is a good. This is now highest level on this. You've got to go all the way back to May 2024. So 18-month highs nearly on this. A breach of $4 might be interesting. 420 looks like a better level. So keep this on your radar, perhaps. But we'll stick with LYC and DMP for the moment. Into the US, let's have a look at Micron. Micron's having a good day at the office. You can see there we're moving back up towards 254. So Micron's held on despite sort of weakness in some of the other tech stocks. The other one that we've talked about frequently is Robinhood. This had the drop through 124, but then bounced significantly on Friday. Just keep an eye on this if it moves back into this range. If we just have a quick scan to the rare earths ETF, which I still like. We talked about it when it was down here as a potential one to keep an eye on. Now it's bounced, as though it's going to close that gap. Could be a move through 73 would be very interesting on this. Keep this on your radar in the US. And of course, as the week progresses, Nvidia worth a look at. You can see there that we have had, we did have a test of support on Friday, but in extended hours trading, it's back to 190. $20 maybe in this, but those Wednesday earnings, I would just keep away from this for right now. And of course, one that we keep on sort of touching base with is Tesla, which is we saw Peter Thiel sell Tesla. We saw a breach of key level at 410. But you can see the bounce in extended hours trading again, go all the way down to a spectacularly low 383. which is the lowest really since mid-September. So it depends where you're sitting on this. If you see it at value, maybe you move over back up to sort of 420 or so. Could see it sort of zip up again. But yeah, to me, it's too soon, too early. But obviously, there's many people who believe that Tesla are a good long-term position to hold. And it's very difficult to argue with that based on the fundamentals. So anyway, that's it for today. As I said, I'll plant my flag in MU for today and keep an eye on the rare earths ETF. So just to review, REMX and MU. Keep an eye on AAC and PLS, but we do like LYC on a breach of 15.17 and Domino's Pizza if it continues. And in the FX world, possibly an Aussie yen. And now we've breached that pivot down to the S1 is worth an eye on. And just keep an eye on the Nasdaq. It is doing very well. And we may get a sort of pause. We are. That's the level to keep an eye on, around about 25,250. But still continues to do okay, as we can see by the 30-minute chart. Thank you very much to you all. Enjoy your days too. Really appreciate you being here. If you're doing this on catch up, be always great to hear from you. And we're back on Thursday, both on GoToWebinar and on YouTube, and likewise with Inner Circle. Sorry, on Thursday, and with Inner Circle on Wednesday. We'll see you there. See some of your EA guys tonight, of course. And yeah, great safe. See you soon. Bye for now.